Happy Friday, traders. Okay, so we're ending the week with some important economic data. Yesterday we had the Australian jobs data. Now that employment data came out much better than expected. Market was expecting 25,000 jobs to be added, and it came out well above that at 65,000 jobs. 50,000 of those were actually full-time employment, which is a big positive, and the unemployment rate dropped from 4.2% to 4.1%. So it was an excellent report. So what does that mean? It basically means that there is no chance of an RBA rate cut this year. So the earliest that might happen would be February next year. But certainly if inflation does not come down, the market may actually start thinking the RBA still may have to raise rates. So look, this is a big positive for the Aussie. It certainly will put a floor in the Aussie below market. So I imagine it's probably pretty close as well. So I certainly would not be selling the Aussie below 67 cents. Okay, so one central bank that did cut rates yesterday was the European Central Bank, the ECB. They cut rates from 3.5% to 3.25%. Look, the Eurozone story is not the best at the moment. We've got growth that is rapidly slowing. Also manufacturing activity as well is in sharp contractionary territory and 15-month lows. So they will continue to cut rates. And the market's expecting another rate cut by the ECB in December to take their rate down to, say, 3%. So that's why we've got Euro down towards 108 and will continue to go lower. So I certainly wouldn't be buying the dip in Euro because we probably will be seeing lower levels further out. Okay, so last night we had some important economic data out of the US. We had retail sales in the US. Now that data came out above expectations. So market was expecting 0.3% for the month. That actually came out at plus 0.7%. So look, US economic data continues to outperform. And we saw US bond yields higher than that. So US 10-year yields are at around 4.1%. And that is what is keeping the US dollar so strong. And the market, even though they expect the Fed to cut rates again in November, but they're starting to think that maybe the Fed doesn't need to cut as aggressively anymore, and potentially they may even pause after their next cut. So yes, the US dollar story now, we're seeing a strong US dollar across the board. And that's obviously why we saw dollar yen last night trade back above 150 where it is now. And speaking of the yen, we've got some Japanese inflation numbers out today. So if that data does come in strong and above expectations, market will start pricing in that the BOJ will have to hike rates probably in December. So look, potentially we could see some dollar yen weakness on the back of that, but unless we get some very strong inflation data out of Japan, I imagine that dollar yen will continue to trade on the bid side with that stronger US dollar. Okay, finally, so one market that doesn't care about anything and is trending exceptionally well is gold. So we've been talking for a while, targets for gold topside around 2,700, and last night we pretty much got there, and we're opening Asia at the moment, close to those levels. So we do have the weekend coming up. We've obviously got geopolitical risks. We're in the Middle East, obviously what's happening with Iran and Israel. So certainly if something happened on the weekend, we could have a huge gap open in gold on Monday. So certainly you do not want to be selling gold going into the weekend. And the same with crude. Like crude's actually dropped almost 12% from its highs recently, trading down towards $70. I certainly would not be selling crude into the weekend and potentially buying it for potential gap risks on those geopolitical concerns. Anyway, look, wish you luck for your trading at the end of the week, and we'll check back in with you soon.